Good morning from Los Angeles. How's everybody doing? Welcome to Bloody Friday. Um, I mean, I'm not going to say, but I am going to say, I'm not, I told you so. So I had given the warnings for the last 2 months. I mean, the reason I started this channel actually was specifically due to this reason. If you're an investor, trader, because I had pretty much, besides a gut feeling, obviously, that things are getting out of control on the upside, trees do not grow to the sky and they do get trimmed. And that's what's happening right now. Hopefully, it won't turn into something more important. But we're selling off today, obviously. And then we've been selling off. We're down about 10, 12% in NASDAQ and about, close to that in the S&P 500. But then I will get into that when I go through my watch list. So welcome you all. Thank you for the support. Channel just broke, not a week ago, broke 1,000 subscribers. I think even if you guys don't do anything else and go watch the previous content that we put up, and there's a lot of videos on there, you guys will learn a lot. Hopefully you took advantage of this downdraft, and I had explained exactly almost like 2-3 weeks ago how you can benefit when things go down, and the playbook was there. I know for some of you it's new, for some of you intermediates, you've probably done it. And if you're advanced, I think you probably are making money because like my mentor said, right, market takes the stairs up and then takes the express elevator down. And that's what we're experiencing right now. This is when the 3 Ps are the most important: patience, position, and planning. Patience, definitely, because you guys may think, market's down 10%. I think I'll go in. No, you need to. A lot of charts are broken, which I'm going to go through at the end, and it takes time to heal these wounds. And volatility has picked up. I talked about that last week, ironically, about VIX volatility index. It was about 12, moved to 16. I said, watch out, and that's 30. When the volatility index gets up to 30. Watch out, things are going to get crazy. But then I do enjoy volatility, unlike a lot of people. That's when you can make money because things are moving as opposed to grinding higher. So with that said, I may not be doing Q&A today. Next week I'll probably do Q&A the whole session as opposed to topics. So let me go into the topics. As you guys know, today the employment report came out. It was horrible. Okay. It was absolutely goddamn horrible, right? And I've been talking about this for 2 months now since I started the channel. If you guys listen to anything I said about what the Fed is doing, and Fed is definitely behind the curve again. So what the market has done is market had expected a soft landing. Soft landings don't happen. You either crash land or you boom. There's no middle. Soft landings are fantasy land. And it's pretty much it's confirmed today with the unemployment report that came out. Job growth is absolutely dead. Unemployment jumped to 4.3%. And if you're a average American, you already know what's going on. You don't have to listen to these idiots in Washington and the Federal Reserve and the Treasury. We know what's going on with us. We know what's going on with our pockets. We know how inflation is hurting everything. We know what credit cards are happening, what's happening with them. Defaults are going through the roof. Look, man, I've been talking about this for 2 months. I don't want to pat myself too much on the back, but I said to you guys, charts are not everything. Pictures are worth 1,000 words, but the important thing is macroeconomy. You have to pay attention to the macro before you can pay attention to the micro. And it's bad out there. It's been bad out there, but then they're just kind of kick the can down the road. Don't do anything about it. And one of the most important things for that is, I'm going to go right into these topics. Inflation, right? Inflation is killing everybody, all of us. Okay. And it has been killing us for 2-3 years. And the Fed has obviously raised the rates to kill inflation. Well, high cost of living has been the most important financial problem for US families for the 3rd year in a row. Fed, are you listening? This was man-made. I mean, obviously there was a pandemic. Not too many people expected it, obviously, right? But what did the Fed do? The Fed printed $8 trillion, pumped it into the economy. A lot of people sitting home got a lot of money. Well, we're going to talk about that too, where that money went and what's going on now. In 2024, a record 41% of surveyed Americans claimed that the high cost of living / inflation is their largest financial issue. Yes, no. You guys will please share these videos. We're going to put them out individually or share Power Hour. And I mean, I know this from my own household. Everything I pay for is up 30, 40, 50, is sometimes double, such as insurance rates, car insurance rates, homeowners insurance rates. I live in California, and it's horrible. I mean, am I making more money to keep pace with inflation than I'm experiencing? Absolutely not, right? So it's a double whammy. My earnings power is limited due to inflation. Inflation is like a tax hike to the average American, from food to gasoline to insurances to, I mean, to going out and eating. Go to a movie these days. It's $100 for two people if you buy popcorn. I mean, think about this, right? And our earnings have not gone up. In fact, adjusted to inflation, earnings are down in this country for the last 12 years in a row. But what did the feds do? They don't listen. They just talk, blah, blah, blah. Everything is fine. Everything is fine until it's not fine. Well, if they listen to the average American, I think things will be a lot better. Maybe I'll run for office. Seriously, I'm just so sick and tired of this shit. Anyway, in 2024, 41% of surveyed Americans claimed inflation is a huge problem. This is up from the previous all-time high of 35%. So think about this. People are screaming out for help and saying, we're getting hurt. We don't have enough money. We have to take on other jobs and we have to do other things. And and then we're going to talk about credit cards in a minute. This is up from the previous all-time high of 35% in 2023 and 32% in 2022. So people have been complaining about inflation, and the government goes, so what? I'm like, yeah, so what? Well, now you're going to get in a recession, and then we'll see where that goes. Additionally, high cost of owning or renting a home, which I've talked about the unaffordability of owning a home these days, right? Or renting. I mean, we know what happens if you're renting. You know what happened to your rent. Unless you're in a rent-controlled area, which is very limited, you're paying a lot more, 40, 50% more. Are you making 40, 50% more on your job? Has your paycheck gone up 40, 50%? I don't think so. Additionally, the input to put this into perspective, and here's a graph, which I always, tell you guys, pictures are worth 1,000 words. Even during the 2008 financial crisis, just 18% of Americans saw high cost of living as their number one problem. So from 2008, which was the last black swan event, right, to today, we're gone from 18% to 41%. Many Americans can no longer afford basic necessities. I agree. There's nothing else to say, and there's the chart. There's the chart going back to 2005. 17, 18% are claiming that inflation is hurting them. And look where we are now. Look at that chart. If that was a stock, I would love it. Unfortunately, it's not. On certain charts, by the way, things going from lower left to the upper right is not a good thing. And this is one of those occasions. So this is the first topic. I have like 7, 8 topics today. So, please, the reason is my partner in crime, Chris, is going on vacation. So I have to do everything next week by myself. I'm so used to having him take care of this stuff. So thanks, buddy. I appreciate it. Shout out to Chris. Next topic is, let's continue with this topic for a couple more minutes. Many Americans have been placing the burden of inflation, on credit cards. True. I mean, I know people who are buying food with their credit cards now. I mean, how does that make sense? You buy it, you eat it, you're done with it after a day, and then the credit card bills are due, and then 40% interest rates on those credit cards. The loaf of bread you bought is double. I mean, it's just not making sense. Don't do these kind of things. I'm not going to tell you not to eat, obviously, but then please do not buy necessities on credit cards. And when they put the burden on credit cards, charge-offs are going through the roof. Look at that chart, right? In the 2008 financial crisis, obviously, charge-offs went through the roof. Well, look at the chart right here. I'm circling it on the lower right-hand corner. What's happening? Well, they're going higher. And with the unemployment rate today at 4.3%, you think people are going to pay their credit cards? People are going to get laid off now, right? And look where we are. This is not a good picture, people. This is not how you run a country. This is not how you run a government. I have my gripes with the government, but both sides, I think, have done massive, massive harm to the average American in this country. So that's that topic. I hope you enjoyed that. So the next one we're going to talk about is finally, another chart that I don't like. See what is happening? The charts I'm showing today, unlike stocks, which are going from the upper left to the lower right, all these charts are going from the lower left to the upper right. This is our debt, people. I've been talking about this for 2 months. We just broke $35 trillion with a T. We just did. Well, it's no big deal. In another 100 days, we're going to be at 36 trillion. In another 100 days, we're going to be at 37 trillion. In another 100 days, we're going to be at 38 trillion. That's where we are. Every 100 days, a trillion. What the hell? What the hell? You people need to go vote. You people need to get these people in Washington out of their offices. They don't care about you. I'm telling you, this is not a political channel, but they don't understand finance. They see your tax dollars going into the treasury and they spend it before it even hits there. Not only they spend it, but they spend multiples of it. I talked about this last week. I said our GDP depends 80% of consumer spending. Well, now that it looks like we're going to go in a recession, our GDP is $27.5 trillion in this country. Our debt is 35 trillion. We're at 125% of GDP. In what world? Greece? Maybe, that's what we are. I said that before. We're like a much larger version of Greece. The only saving grace is we can print money, right? Or add zeros to the Fed ledger so we can just spend it. We need to stop spending on a personal level, family level, country level, state level, city level. We need to stop spending what we don't have, period. That's what we need to do. So total U.S. federal debt has officially hit 35 trillion for the first time in history. No shit. Since 2020, U.S. now has added, since 2020, people, think about this. This is only 4 years, 3.5 years, 4.5 years ago. Since 2020, U.S. has now added 12 trillion in federal debt. Trillion with a T. Okay, in other words, U.S. has added, on average, of 280 billion of federal debt every single month since January 2020. Are we for real here? This means that the U.S. now has 105,000 in federal debt for every person living in the country. That's all of you here in the chat, all of you that's going to watch it later, every child, every newborn. Imagine you're a newborn, 1 day old, you have 105,000 in federal debt on your neck. Wonderful. We're doing a great job in this country. All while deficit spending as a percentage of GDP is currently at World War II levels. We're not in war. Think about this. During wars, right, that increases because we need to produce more weapons, we need to support our troops, we need to win the war, all that stuff, right? We're back to that. We're higher than the World War II levels, debt to GDP. How can this possibly end well? No, it won't end well. And again, talking about it, doing nothing, right? I'm just trying to inform you people so you can go create some water cooler chat or on your family dinners. Talk about these things. These are important. If you have kids, I feel horrible for my kids. I feel horrible for their future. I'm just going to be on this planet for another 15, 20 years if I'm lucky. But what about them? Why should they be shackled with this for the rest of their lives? And this is never going to get paid back, by the way. And that's why the stock market's now saying, wait a minute, what's happening here, right? Well, there you go. So, yeah, we're breaking records. If I'm still doing the channel in another 100 days, which is, what is that, roughly 3.5 months, we'll be at 36 trillion. I'm sure I'll talk about it, put up the chart, and another 100 days we'll be at $37 trillion. Disgusting. Disgusting. Seriously disgusting. So please talk about these issues. Do not run your household like the US government is running their household. It's a busted system. It's broken. Okay? Don't do this. Don't do what the US government's doing. Don't do what the city council is doing. Don't do what the state is doing. During the pandemic, California had a $50 billion surplus. Okay? Today, we're at $50 billion deficit. That's the kind of shithole I'm living in at the moment. But anyway, I'm on a roll today because I'm upset. Not because the market's going down. I'm fine with that. I'll survive that. But this is not good. And, we got to pay the piper at some point. And, that's what's going to happen now. So going on to the next topic. Well, one more thing. I forgot I had 3 screenshots on this. Basically same thing. Put this into perspective. US has added debt equal 45%. of our GDP for 2024. So our GDP is 27 trillion. We've added 12 trillion of debt. Okay. And then in the next few topics, I'm going to explain all this debt. What is the ROI on that? What is the return on all this debt that we're getting? What are we getting out of this? Right? In everything, we're investing into something. We're doing something with these trillions, right? Are we just putting them on fire? I'm pretty sure we are. When I talk about the ROI on this debt, has any of this debt, increased debt, has helped you guys financially, personally? No. You know what has done? It has created inflation. And that's definitely hurting you guys, like I said in topic 1. So next one, this is another mind-blowing situation to me, right? Shout out to the Kobesi letter. I subscribe to it. I love their short little tidbits that I can expand on when I talk to you guys. They're on Twitter. I'm on Twitter. Please go subscribe. Not subscribe. Just follow me so you guys will, see what I'm talking about, and follow them as well. Americans can no longer save money. Really? Why is that? Because our man-made inflation is absolutely wiped out. Everything that we have, including our savings, but also it's a personal problem. We love spending money, just like our government. We just take a lead from the government. So, I'm just going to spend the money I don't have on plastic. Don't do it. Cut them in half. Get rid of it. If you don't have it, don't buy it. Unless it's food, unless it's your rent. You don't need it, don't buy it. Americans can no longer save money, of course. So I'm going to talk about the chart in a minute. U.S. personal savings rate declined from 3.5% in May to 3.4% in June. The lowest since 2022. What happened during the pandemic? We printed 8 trillion. We sent people money. Unemployment got extended. Remember all this? We were getting the money. And look what happened to the chart. Look at the chart on the right. Do you see the spike? You know what happened? People got money from the government and they saved it. They paid their credit card debts. They paid their mortgages off. All good, right? Okay. Now look at the chart. Look at the lower right-hand corner where I circled it. What does that look like? What did we do with all this cash that we got? Did we invest? Some people did. If we did, great. Did we buy real estate, create passive income? Some people did. Great. I wish I was on this channel 2 years ago, 3 years ago, or during the pandemic, but then no. But it's better late than never. What did we do? We blew the cash. We put it on fire, just like our government is. All we do is get plastic and buy shit. Don't do it. You don't need it. Don't do it. By comparison, in May 2023, the savings rate was 5.3%. No kidding. Look at the savings rate. Look what's happening in this country. Look at where we are. We don't save money. An average couple, by the way, in their 30s, starting life, they have $500 in the bank. That's what they have. That's the average savings account. What is happening in this world? Okay. If I ran my household this way, I'd be bankrupt like 60 times over. Excluding 2022, the saving rate sits at the lowest level since the 2008 financial crisis. Okay. See all these signs that I've been talking about for the last 2 months, 2.5 months on the channel? Well, look what's happening in the background in the market when I show you guys the charts. This comes after U.S. households, listen to this one, have depleted, meaning put it on fire, right? Buy another iPhone, buy another TV we don't need, buy another car, whatever it is, right? This comes after U.S. households depleted 2.3 trillion of excess savings. Excess. We were in excess, meaning we took the money from the government. Some did good things. Some blew it out of, blew their stack. But look where we are. We're a spender economy. We love spending money. And that's why 70%, 80% of our GDP depends on consumer spending. That's what we did. We blew it. You guys are going to wait for another pandemic, right, to get the bank accounts back up again. Hopefully, well, I'm not hoping for a pandemic. Definitely not. But what is going to be the occasion that the government's going to print 8 trillion and send it to you next time? I don't see one coming up. So at the same time, the credit card that reached 1.06 trillion in July, last month, just 3 billion below the all-time record. So on the last topic, the first topic, how I said people are bankrolling their lives with credit cards now, right? There you go. Not only we just blew the savings apart, okay? Now no savings left. Now we're starting spending our money on credit cards to buy necessities. Horrible things are going to happen here. The next one that I'm going to talk about is, look, I'm not a young chicken. In about, let's see, 50 years, 7 more years, I want my money from the government as from Social Security, right? I got 7 years, 6.5 years to go. I'm definitely taking early retirement. Screw the rest, because there's not going to be any money left. So, have the youngsters pay for my retirement, which is good. So Social Security, Medicare, and Medicaid combined spending as a share of GDP is expected to reach a near record 10.3% in 2024, right? Now, my daughter, love her to death, and she's getting into medicine, which I told her to do, because guess what? 70 million of us, I'm a baby boomer, 70 million of us are retiring in the next 10 years. Where's the beef? Where's the money? Where is it? The wonderful politicians you guys trust so much and defend on Twitter or whatever you guys do, right? Everybody has an opinion about politics. None of these people are helping you. Trust me. None of them. None. Okay? Because they don't tell you the truth. So when those 70 million people retire, what they have done is they have raided the Social Security fund already. They have borrowed against it, part of that spending. Otherwise, our national debt would be higher, right? Well, where's that money going to come from? I want my money. I worked for years and years, paid into Social Security. I want my shit, right? Where is it? Oh, no. Well, another chart that's going from lower left to the upper right, which I don't like. It should not be that way. So we know what happened to our healthcare costs, right? By comparison, in 2007, when the financial crisis hit, spending on these items was just 8% of GDP. Now we're up to 10.5%, just like the national debt, right? Debt to GDP, we're at 125% now. All these charts going lower left to the upper right, and none of them should be going that way. It should be going the other way around. Government health programs alone, I mean, I'm going to hopefully get Medicare. Hopefully the money is going to be there for me to get it. And government healthcare programs alone, including Medicare and Medicaid, are projected to reach 6% of GDP in 2024. Well above the 1934 to 2023 average of 3.4%. So you can see what's happening, right? Inflation. You know what has happened to your health insurance premiums, right? You guys figure that out yet? That's also inflation, added to inflation, right? But then, the deductibles are going up. You have to pay for everything, office visit, drug prices are through the roof, right? This is all inflation. And so you work all your life, you retire, you expect to get some Social Security money, which by then, because of inflation, probably won't even buy you like a couple of loaves of bread. So hopefully you figure it out by the time you retire, you have enough cash not to depend on the government. Please, people, do not depend on the government. Government is not your friend. Either party. I don't care who you guys are rooting for. And this driven by rapidly rising healthcare costs. No kidding. Well, the baby boomers are going to retire. My daughter listening to me, and hopefully she will have an amazing career fixing my knees, my hips, whatever is going to go wrong with me, right? And at least on that part, I'm lucky. The Social Security Administration projects there will be, there it is. I didn't even read this yet. Projects there will be more than 67 million people receiving benefits this year, up 8 million since 2015. And that does not include the 70 million baby boomers who are retiring in the next decade. Think about this, which one of them is going to be me. Where is all this money coming from? Remember the debt, right? Sprint, light on fire. Yeah, that's where it's coming from. Kobesi letter. So yeah, I mean, don't make it. By the way, cheeky chops, don't make it. Don't make it political. So I've been talking about this for the last, I don't know, again, 2.5 months since the channel, but I've been talking about this in my circles forever. So this is what I'm encouraging all of you to do. Please go, have intellectual conversations, not arguments, not debates, not yelling matches, because we're not good at socializing these days. We all want to just text each other. What I want you guys to do is talk about subjects like this at the dinner table: inflation and stock market and investing and dollar cost averaging and all that good stuff. Yes, it's boring, but if you did, look where you'd be instead of watching me. So BRICS are the the 5 nations: India, Britain, Russia and all these wonderful enemies of ours, except India probably. But so what they've been doing is that they've been trying to wean off themselves from the dollar, trades of dollar, petrodollars, all this stuff, right? Well, I've talked about this. There's content on the channel. You guys can go check it out. But what they were missing is they were missing the money transfer. I mean, trillions of dollars are sloshing around the world under the SWIFT system. SWIFT system is what banks use, interbank, money exchange, right? Account to account exchanges. So now they said, well, since we're going to wean ourselves off the US dollar because it's toilet paper, it's worthless because of the Fed, we're just going to create our own SWIFT system, right? And I think this is the next step. This is the next logical step in my mind for these people to get off the US dollar dependency. I mean, that's what's happening. I mean, not that I'm a huge fan of Putin on any of these people, but what I'm saying is I see their point. And the other thing that they're doing is, I talked about it, BRICS are selling, China and India and Russia, and they're all selling what? They're selling US treasuries because they're going like, I don't want it, right? And the Saudis said no more petrodollars. That agreement has been in place for over 50 years. No more, right? So everybody's kind of going like abandoning the US dollar, saying, now, do I think any of this matters to us as average Americans? Absolutely it does. Why does it do that? Well, the only saving grace we have is the only saving grace we have, I just read a comment, that's why I chuckled, is that US dollar is still the chosen currency of the planet. Okay? A lot of stuff is done, but when the Saudis say no more petrodollars, I'll sell you my oil and you can pay me in your yuans or Japanese yen, right? Or euros. No more US dollars, because that used to be tied up to the US dollar. All trade around the world was tied up to the US dollar, meaning, exporting and importing things. Well, that's not happening anymore. But then these people figured, okay, if we're going to do all this, we need a system, banking system, a SWIFT system of our own that we can, depend on and freely exchange money. Like, you buy something from me, I'll send you the money. Within 30 seconds, it shows up. Now, they could do that on the blockchain with Bitcoin and stuff, but I don't think Bitcoin is there yet. So Russia says the creation of a financial system similar to SWIFT will help create a new economic reality for BRICS countries. I agree with Mr. Putin on this one. I'm not a huge fan, don't get me wrong. Shout out to all the, well, I don't know, not hostages, whatever, the captors that were released, specifically the Wall Street Journal journalist who was, called a spy. I don't know if he was or not, but the guy was been there for 3 years. They're back home, thank God. And the ambassador to Russia also said that creating an alternative to SWIFT is necessary for BRICS, right, to push the de-dollarization agenda ahead. That's what it's called, de-dollarization. I'm telling you, people, watch for this. The US dollar, okay, is not the chosen currency of the planet to do transactions, watch out. Seriously, watch out. Is that going to happen? Probably not in my lifetime. But these countries, these are not small countries. India, China, right? Russia. I mean, these are seriously not small countries. Their GDPs are through the roof, right? And the problem is they have a lot of raw materials, natural resources, such as Russia and India, Russia specifically in natural gas and oil, right? So they want to get off the dollar train, right? That's the de-dollarization. It is necessary to create a new system of financial institutions. They're saying the new system must be technically compatible with the existing financial infrastructures of the participating countries, which includes integration with national payment systems, banks, and other financial institutions. At the same time, the system must ensure a high level of security and data protection. I agree. So this is the next logical step that they're taking. They're going to create their own money transfer system similar to SWIFT. And, writing's on the wall, people. Maybe this is not important to you, but this is very important to the markets. And this is very important to me, because in the macro picture, abandoning the dollar after years and years of depending on the dollar is something very interesting to me. And then that's part of the picture you guys got to watch out for. On the next topic, This is one of my favorite indicators, actually, because today's Power Hour headline said that. Some of you, or most of you, are probably here, are Uber drivers and Lyft drivers from the other channel. Please, by the way, please tell your folks who are not Uber drivers to, subscribe to the channel. It's really good information. I'm really doing it like labor of love here, right? Trying to educate and inform you guys, so maybe you can benefit from it, get off that rat race. As we know, Dara Khosrowshahi, Uber CEO, sold 500,000 shares of stock at 71. Where is Uber today? Under 60. So he saved himself cool $5 million by doing that. So you guys have to understand something. Insiders, okay, without being insider trading, are allowed to buy and sell their own company shares. Most of it is done legally. Not most, 90% plus of it is done legally under 501b plans, they're called. So they're predestined, prearranged sales of shares because they get stock options, which are vested, and they sell and convert it into cash because they want diversification. They don't want all their money in their company stock, right? Okay. So US executives, that includes, by the way, the NVIDIA CEO, since $120 a share, has been selling nonstop, close to $30 million a week, right? A lot of NVIDIA insiders are dumping the stock. Does that mean NVIDIA's top is going to tank? No, but look what is going on, right? If the insiders are selling shares, after not selling shares for years, who knows the business better than an insider or a CEO or a CFO or, who knows that? You? Me? No, they do. That should send you some sort of signal, okay? Executives are dumping stocks at their fastest pace in at least 10 years, okay? Does that give you guys a clue that, if the insiders are dumping shares, they may be thinking their stock is overvalued, their own company stock, right? Okay. The percentage of publicly traded firms seeing net purchases from their officers and directors dropped to 15%. So nobody is buying shares because guess what happened? During the 2008 crisis, every minute I would see on my news ticker, I would see CEOs buying this share, CFOs buying shares, this company, that company, right? Nobody's buying shares anymore. They're all like liquidating. To put this into perspective, the 10-year average of this metric is 26%. So the insider buys who trust their company, underlying stock, or the average is 26, now it's down to 15%. And then if you guys look at the chart, which I always like showing, that's why I like the Kobesi letter, is look at that circle that I circled on the lower right-hand corner. That's where insider sales are, meaning sales versus purchases. Look where they are, right? And look at that little spike in the middle, right? And that happened in 2020 when the market took a dump, right, due to COVID. All the insiders were buying, thinking this is temporary. Well, now it's just a reverse. So does that signal also a major top in the stock market or in individual stocks? Always pay attention. This is public information, people, right? All you have to do is go to Google, say insider sales or insider purchases at Uber or at Lyft or at NVIDIA or at Apple or whatever. When you see CEOs or CFOs, two most important people in a company who know everything about the company, day to day, hour to hour, when they start selling shares, and a lot of other insiders start selling shares, you have to understand that doesn't mean the end, but what that means is that at least things are going to come to a slow down as far as stock prices are concerned. So this is one of my indicators that I watch, which I urge you guys to watch. It's a public info. You guys can all go get it. Next topic. This is something really, really just eye-opening. Okay, this all connects to the first 4, 5, 6 topics that I talked to you guys about. Okay, we all have credit cards, we all have loans, we all have mortgages, hopefully fixed mortgages anyway, not adjustable, because if you had an adjustable mortgage, you're screwed to death. I was lucky enough to refinance my house and I think I have a 4% 30-year fixed. Good. Otherwise, right now they're like 7s, but I think rates are going down. I'm going to show you guys in the charts. What has happened to the credit card interest rates? When the interest rate were 0, credit card interest rates were like 20%, 22%. Sometimes if your credit is good, you would get like better rates, but they're usually never below 20. So they can the banks borrow from the government at 0% and lend it to you at 20%. That's called the margin, right? That's on credit cards. So interest paid on U.S. consumer non-mortgage, that spiked by 50% in 2023, the highest increase in at least 27 years. Do you guys see the common theme here? Every chart I'm showing you is a spike on it, right? That goes to show how unhealthy the economy is. Unlike the Fed, it keeps saying everything is fine. In fact, last week, when Jerome Powell got on TV on CNBC and lied, and he said everything is fine, it's all good, no worries, inflation is under control, it's coming under control, we're going to watch. By the way, I'm not convinced that they're going to cut the rates at least twice, if not 3 times this year, because if they don't and they stay behind the curve, market's going to tank another 10%. And shit's going to get ugly. So I'm pretty sure they're going to cut rates. And if you guys go watch Power Hour, exactly maybe a month and a half ago, the day they cut the rates is the day the market tops. And look what's happening. The talk of interest rate cuts are coming around. Market has topped already because market's sniffing what? Shit, meaning recession. That's what the market's sniffing. So by comparison, the previous record was 14.1% in 2000, a year before the 2001 recession. So remember I talked to you guys what we're doing? We're financing everything with our credit cards these days. This is what's happening. At the same time, interest paid on mortgage debt jumped 13.8% in 2023, the most since 2006. Meanwhile, the average interest rate on credit card hit 22.8%. Okay, that's the average. Go check your credit cards, right? When you get your statement or online, there is an area that you see what kind of interest you're paying when you're carrying those balances. Remember what I told you guys, if you're going to use credit cards, that's a wonderful thing to use credit, but if you do use it properly, meaning you buy stuff, before 30 days is out, you pay all of it. So basically you're floating the bank's money for 30 days interest-free. But what happens? Most of us don't. Most of us get on minimum payments, all this garbage. And then the stuff we bought 6 months ago is doubled already because this is the average 22.8. I've seen as high as 45. Meanwhile, it's 22, near all-time high. Total household debt also reached a new record. This is household debt now, outside the U.S. federal debt, 17.7 trillion in Q1 2024 and going up. Right? So this is added, pressure on the consumer. Now you guys understand where the consumer is at, right? And consumers are drowning in interest expense. No kidding. And deja vu. And markets smelled it, and sure enough, it's getting taken out in the back and shot. Well, there you go. This is the result. Please don't do these, people. Please don't do this. Okay, and this is going to be one of my favorite last topic probably. We're going to talk about the debt, right? We talk about debt is hitting 35 trillion. Every 100 days, it's going up $1 trillion, all that negative stuff. It's not negative, it's reality. You guys have to deal with it. So what I wanted to know is all this debt, right? That is a good thing. That is like the oil of the economy. We need some debt, not out of control 35 trillion in debt that we're never going to get paid back. But that is a good thing. A lot of corporations use debt. I use debt, but you have to use it smart, okay? Here's the deal. What is this debt producing? Right? So our GDP is 27 trillion. Our debt is for 2024. Our debt just hit 35 trillion. We're 125% of GDP. So all this time, the last 12 trillion that we put on fire since 2020, like I said, what did that get us? Right? So there is a ROI, something called ROI, return on investment. Look at that as investment. If I'm borrowing money at 5%, let's say, well, I better be opening a business or do something with it that gets me 10%. So I'll do the servicing of the debt at 5%, and then I'll make myself net margin of 5. Think about it, right? So the U.S. government federal debt just hit 35 trillion, right? Up 12 trillion last 4 years. What did it get us? So here's the answer. Currently, every new dollar of U.S. public debt generates, think about this, just 58 cents of GDP, near the lowest on record. Now, we put $1 on fire, which I would expect if I put $1 on fire, okay, I would get $1.58 out of that. So that's the net margin, okay, after I pay the dollar debt off. No, think about this. We put $1 on fire, and then we get 58 cents out of it. You guys getting this picture yet? You getting it? Okay. How is this working? How is this going? Is it good? No. By comparison, in the 1960s, when I was born, this metric was as high as $9.80. Meaning, when the US government put $1 on fire and borrowed, the return was almost 10, meaning 10 to 1. Now, that's how you use debt properly. Okay? In 2000, let's not go back too far, it was 4. Meaning, when we spent in the 2000 crash, right, government tried to save the economy and pump the money in, we got 4 out of that. So $1 returned 4. Still positive margin. Think about margin. In the 60s, $1, before we were dead crazy and we had politicians who love spending our shit, $10. So 1 to 10 ratio, 1 to 4 ratio. Where are we today? Today, we're at -1 to 58 cents. How's this working out for you? Powell, Yellen, Biden, Trump, all of you. How's this working out? Good? Yeah, sure. So over the last 4 years, U.S. national debt has skyrocketed by 11.6 trillion, 12 trillion, while the U.S. added 6.6 trillion in GDP. So all that money that we put on fire, right? We spent 12 trillion. It could only get us 6.6 trillion in GDP growth. So that's where the 58 cents comes into play. So maybe we should stop putting money on fire until we can get back to the 60s or maybe the 2000s, where our return on our investment, ROI on the debt, was good. 4 to 1, 10 to 1. In other words, U.S. economy's productivity has declined near the worst levels in modern history. What's the long-term plan here? I don't know. Maybe they'll elect me and then I'll just go fire everybody. Seriously, this is ridiculous. Another chart that should not be going the way it should be going. So do you guys see this chart? In the chart, it goes back to 1952. That's where the 10 to 1 ratio was, right? So what we're doing is we keep borrowing, but then the productivity gains with that borrowing is not keeping pace with anything. In fact, we're under the red line. We're at negative now. So that means at least we should not put money on fire. That doesn't produce shit, right? So here's your ROI, people. Here's what your people are doing in Washington and in the government. They're borrowing, spending. Nothing is happening. In fact, we're just literally putting the money on fire now. So this is it. That's all I have for you guys for today. I went through the topics pretty quickly. So what I'm going to do is I'm going to run to my charts now. And, my partner said don't answer questions today. But if you do guys have questions, okay, this is what I'm going to do. If you guys have questions, Cadlo is saying that. Yeah, Cadlo is a little senile, William. But anyway, so if you guys have questions, you can send them to me, Sergio@sergioavedian.com. That's the email if you have questions, because I'm under strict guidance today that I cannot answer questions. Surge Club, I don't know about that, bro. So I'm going to put my charts up there, and Marco's eating it without a question, absolutely just getting taken out in the back and shot to pieces. So let's go through my charts. Market's down, NASDAQ is down 500 points, Dow Jones is down 865 points, S&P is down 130 points. So meaning we're down on average between 2.5% to 3%. Everybody's love NVIDIA is about 105. I will go through the charts real quick. And so let's start with the triple Qs. I hope you guys can see this. So here's the triple Qs daily chart. I'm going to look at daily chart. I have my lines drawn already. These lines I've been talking to you guys about for the last months. This uptrend was drawn already. That broke right about 480. That was the first sign of trouble. Today, Remember the bear flags that we talked about? Hopefully you got your technical trading books. And today we're breaking an intermediate term uptrend in NASDAQ. Next support level is going to be right at this low, which is going to be about 443. We're at 447. So we'll probably get a bounce, dead cat bounce. If that doesn't hold, the 200-day moving average is coming into play at 430. 431.63. And then if that doesn't hold, I mean, we have the long-term uptrend at 420. So we were at 500 on NASDAQ, triple Qs, NASDAQ 100, which includes all the Magnificent Seven. So 500, 505-ish to 420 would be 80 points. It'll be about 15, 16% pullback, which is fine. If we talked about dollar cost averaging last week, that may be a decent entry point. So that's the triple Qs, okay? Let's go through what's happening to interest rates. Remember, I've been showing this chart to you guys for months with the same old lines. TLT is the inverse of the 20-year note. When the chart's going up, that means the rates are going down. Look what's happening to the rates. They're collapsing, right? The reason for that is now the expectation is that if we do go in a recession, which we are, interest rates are going to go lower. Well, that's what's going to happen. They have to start cutting interest rates. And technicals are technicals. I had this channel drawn on this thing for months. It broke out at 91. Now we're at 98. That means rates are going down. I have my resistance lines drawn. This was another downtrend going back, I don't know, years. Actually going back to 2020. That's the downtrend, and I think that's where the interest rates are going to go. They're going to go back to probably 3% again because market needs it. And so what happens is that when the stocks go down, interest rates go down with it, right? Because stocks are going down due to recession fears, and that's what happens. So let's look at a couple of favorites. NVIDIA is a 105.31. It's holding for dear life to its intermediate term uptrend, although there is really decent support right down here at the old high, which is at 97, and good support at good support at 84.37. Okay, so patience. Okay, the 3 P's, please. Patience, position, and planning. If you're on these stocks, you should have sold because it broke the 50-day while ago. It broke the 20-day way up there at 125. Look how much money you would have saved yourself. 20% headache you would have saved. The intermediate term uptrend is right on it now. I mean, it hit once, bounced off. It's testing it now. God help people who hold NVIDIA. If it breaks that intermediate term uptrend, now then we're going to look at 97. I mean, look, and I talked about insider sales. There has been nothing but insider sales. Amazon, let's look at Amazon. Absolutely in the shit house today. If you guys have your books, and remember we talk about a pattern called head and shoulder pattern. There is the left shoulder, there is the head, there is the perfect right shoulder with the neckline right at 176. Stock at as low as 160 today. Jeff Bezos has lost a few billion today. I mean, look, it just broke his 200-day moving average. I mean, that's a horrible sign. I would, Amazon is left for dead. I wouldn't touch it with your money. Let's look at Tesla. Pulling back now, obviously, the breakout happened, which you all should have participated because I told you, I gave you guys the trade. There was the uptrend. I mean, the resistance, it broke right through it, went from about 185, 190 to 270 in about a week and a half. You guys should have made decent money. And then, it was due to the catalyst of them coming with their, self-driving cars. Well, we're back to 206. We're back into some sort of support, right on the 200-day average. Am I buying any stocks? Here's my bottom line. No. Am I selling every single rally? Absolutely, until it's proven otherwise. And remember, for 2 years, it was buy every dip. Now it's going to be sell every rally until the market can prove itself otherwise to me. Look at this chart, right? Okay, look at this, right? This is Micron. This is not a small company. Stock topped at 157. Today, we're hitting 91. That's 65 points, okay? So, again, my mentors always said, it's never too late to sell. Okay, you know, I mean, your rule of thumb should have been when it broke the 50-day average at 130, you should have sold. Period. That was it. That was the first close below the 50-day, which it was hugging on the way up. 130, you should have been out. Now it's broken the 200-day like hot knife through butter. I have no idea where the support is. Support is probably right down here somewhere, about 80 level. To broken. These charts, by the way, are all absolutely hammered and broken. It'll take a while for these things to heal. Let's look at AMD, which I had talked about. I'll look at Apple. AMD, garbage, right? Again, hot knife through butter. Stock was 187. Today it's at 132. 50-day average. I mean, 50-day average was broken at 166. Should have been out. That's your stop point. If you don't follow anything, just follow the 50-day exponential moving average. 200-day was broken at 153. It's dead. Left for dead. I have my support lines drawn. So the reason I do these is because once they get there, you know, there may be short-term trading opportunities. That's why I do these. I'm highlighting them now. I mean, there's decent support all the way down on the stock. So it's not going to go straight down, obviously, right? But the trend is down. Remember, I used to say trend is up, trend is up. Well, no, trend is down. Let's look at Apple. Apple is the only green today in the NASDAQ when the NASDAQ down 500. So what does that say? That says it's outperforming, right? These are the types of stocks. Earnings came out yesterday. They were okay. And stock is up 5.5 points, up about 2.5% when the overall market is taking it, right? So you need now the time has come to find outperforming stocks. Will I buy Apple? No. Will I buy any stock? No. Will I short things? Yes. Am I short things? Yes. But let me go to a few individual issues. Maybe my boss will allow me to answer some questions. Let's look at Uber. Let's look at Uber. Okay, Uber. Look at Uber. Right. It broke the 50-day average right here. I'm highlighting at $70 a share. Exactly when Dara Khosrowshahi was selling the stock, by the way. Smart man. Today we hit 57.5, right into my support. In fact, I bought some 2 week out, August 16th. Earnings are next Tuesday. 2 week out, August 16th. $65 calls. I'm even on it. If I start losing money on it, I'm definitely getting the heck out of Dodge. Let's look at VIX. Remember, I talked to you guys about VIX, right? Look at the spike. Do you see what's happened here? So I said to you guys, if you please go watch the older power hours instead of me repeating. So VIX is an inverse indicator of what the market's doing. Okay. When VIX is low down to 12, that means market's going up. When VIX is 26, it spiked today from about 18 to 30 almost. But now you guys have to be really, really patient. The first peak. Okay. What's going to happen is that VIX goes as high as 38, 40, and during the pandemic, it got up to 85. Okay. So this is the bigger picture going back to 2020. Okay. When VIX is doing this, that means the market's crashing. Now, in the short term, you know, it's about 30 to 35 is where short-term bottoms happen. But then volatility is going to stick around for a while now. So you guys, it's VIX. VIX is the symbol. You guys definitely should pay attention to it. When VIX goes up, market goes down, or vice versa. One of my favorite ones, I told you about this, guys. When stock was $2 a share, Serve Robotics, those little bug-eye robots, stock was 2, hit 24 this week. I don't know. Hopefully, if you guys listened and bought some shares, I mean, even if you had 100 shares, that's a couple of grand. You invest 200, it's 24. Obviously, nobody's going to buy at the low. Nobody's going to sell at the high. But I gave that to you guys like a month ago. I had a decent amount of shares. I actually sold it in the 8s when I quadrupled my money, and then watch it go to 24. But then I'm short now. I'm short a couple thousand shares. And I mean, you know, I'm giving you guys some winners, so please take advantage of it. What else is there to watch? Honestly, not much. I mean, you know, my list is full of stocks that I've watched. Carvana was one. It's getting kind of shot today, but then earnings came out that made a new high yesterday. So what I want you guys to pay attention to is I want you guys to pay attention on stocks that are outperforming. You're going to say, well, what is that? How do I figure that out? Well, on a day like today, for example, Apple is outperforming. It's green on a massively red down day, right? And next week, I will start giving you guys what I subscribe to, what Services I subscribe to, they're not expensive, 20, 30 bucks a month. It's definitely worth it. It'll do all the work for you guys. It'll find you the underperforming stocks, outperforming stocks, relatively strong stocks, all these things. Okay. So I will give you guys that. I have no affiliation or nothing with it. I pay for the services. And I think it's worth it if you guys are going to do this intelligently and not completely depending on what I'm doing. I don't know, Bitcoin. Oh yeah, this is MicroStrategy, Bitcoin. Look, we talked about this. This is the Bitcoin surrogate. It's going sideways just like Bitcoin is. And I talked about this last week with you guys. Bitcoin is decoupling itself. Bitcoin by now, with all the sell-off we had in the stock market, I would have thought it would have sold off to 50,000. No, it's holding at 62, 64, 65. I think it's great. I think the decoupling is amazing. With that said, let me just quickly go. If you see any questions, we want to finish it in like an hour today. My boss said so. Oh, Goldman Sachs is getting shot. Okay, that's wonderful. Let me see if you guys have any questions. I'll try to answer for 5-10 minutes. Chris, I know you said no questions, but today is an interesting day to answer questions. All right. So with that said, let's see if you guys have any questions. So, thanks, Vic. Anyway, so let's go to the top. Let's see. Watching Larry Kudlow, good. Go, Sergio, go. Thank you. We love you, big guy. Keep doing what you're. Yeah, because what happens is that rates go up fast. They don't come down fast. But we are seeing more dovish sentiment. In what world is that? Yeah. Why are we seeing dovish sentiment, Nate Dogg? It's because market's tanking and we're going in a recession. John, good morning. We'll probably do dinner this weekend with John. Yes, Bitcoin. Jobs. Did you see that? I saw that. I was on TikTok. I in fact retweeted that thing. You guys follow me on TikTok, please. At Sergio AVED. That's my handle. Yeah, he bought 45 items in 2020 for $130. It was basically all food and necessities, right? And then you have buy again button, so we can buy faster with our credit cards. He clicked on the same thing. On the same 45 items, he spent $400 2.5 years later. That's perfect explanation of inflation right there. 100% right there. Actually, you guys can do that too. If you have a saved some sort of cart, or Amazon, Walmart, Costco, Target, they all allow you to buy the same shit you bought like a year ago, 2 years ago. They saved it for you. So you guys do the same thing. Let's see if you're going to pay double, triple. Biden's inflation has done. Yep, definitely has. I mean, I don't know about Biden. I mean, I think it's the Federal Reserve. The president has no power. It doesn't matter. Gordon says corporate greed. Yeah, I mean, we all are greedy people. Yep. I was born in South Africa. Yeah, exactly. Venezuela, South African countries, Argentina, what's happening, inflation there. You bet, because it's worthless. Inflation is out of control. My income from work is down 20 and shopping costs up. Hey, you go, William. Just proof is in the pudding. Morning, gigpreneurs. Good morning, we Zoom. The world's in trouble. The world has been in trouble. It's just coming to roost now, I think. I mean, again, not political. It's the first time in my life of 58 years now, I am not watching the Olympics. Okay. So you guys know, I love the Olympics. I watch every single one every 4 years. I'm not watching it this year. I'm not boycotting. I'm not watching it. I think it's shit. From the starting ceremony, gave me the indicator of like, am I going to waste my time watching this garbage? I love athletes competing. And then yesterday was a boxing match. Did you guys see that on Twitter? You guys should take a look at that. Cheeky Chops is spamming the board. I'm with you, Cheeky. Okay, thanks for the Russia guy. Thank you, William. We are funding wars. Yes, we are. That's where the money is going, Jordan. How much did Ukraine get? 200 billion so far? It's probably just that's the part that they say it is. I'm pretty sure it's much higher than that. And talking about wars, well, watch out this weekend. Shit like this always happens on the weekends between Israel and Iran. Have you guys seen Netanyahu at the United Nations? Or no, at the U.S. Congress. What am I saying? That guy looked like he owned the goddamn joint. You know what I'm saying? I'm not sure, bro. I'm not sure who's running the country. Yeah, it's the American way, Cheeky Chops. We love spending money on plastic we don't have. Okay, see, I paid for our water with credit card. Yeah, I don't know what to say. Quick. Hyperinflation is the only way it's going to be able to pay its debt. Nope, it's going to be worse, actually, going the other way. Job growth hit the brakes July. Yeah, job growth has been hitting the brakes, Paul. Yeah, I've been talking about it for 2.5 months, but I've been talking about it for a year now in my own circles. I don't trust any government job stats. Yeah, I know. It's always lagging indicator anyway, we Zoom. Sorry. That's funny. Sorry, Sergio, I gotta head into Costco and put my food and credit card. Look, man, as long as you're paying it in 30 days, I don't mind you doing that, but please don't carry balances. Yeah. You're a smart, informed guy. I don't need to watch you, but I do. Well, you're just contradicting yourself there. Never shut your ears off. Okay. Medicaid was blown by the yeah, it was. Oh my God, yeah. Let's not get me started on the border now. Let's just let's not go there. I got 2 kids. One's going to college, wants to be a doctor. The other one, I don't know what he wants to do. Yeah, socialism. I'm not a socialist. Don't get me wrong. I'm the most capitalist person ever. I mean, I was on Wall Street for 30 years. So, but see, that's a good comment, Cheeky Chops. I'll even highlight that one. There you go. At least you guys are learning something here. You know what I mean? I mean, Ride Share Guy is good. Don't get me wrong. I think Ride Share Guy is great for what it is. Oh my Cheeky Chops! Holy shit, man! I'm gonna block you. Okay, he's just spamming the goddamn board. Okay, recession, yes, it's coming. Inflation is so I need my credit card to pay. Yeah, I feel you, man. Feels like 2008 is back. Well, they will say 2000 is back after it has happened, but then writing is on the wall. That's a scoop pattern on Tesla. Scoop pattern? I don't know about that. We didn't trust you at that time on SRVE. Okay, first of all, symbol is SERV, not SRVE. And well, I guess trust is earned, huh? All right. So with that said, any other questions? Don't be shy. There's 20 of you here. Oh, I think that's a new high, Chris. 20 of you. Okay, please. Okay, can I please ask you to spread the good word that this guy is talking the truth? If you like what I'm saying, if you don't, then you don't. But I'm always going to talk the truth. Number one, my experiences personally. I see the big picture. I don't like it. I've been saying it for 3 months. I said my bias has been negative for months. Okay, for 2.5 months at least on this channel. So you guys should have paid attention. 1, 2. Please subscribe if you're not subscribed. Please share the videos with others. Please have conversations about these important topics other than football or look, everything has its place, but you need to know what's happening with the economy. Okay. And if I can guide you guys in these treacherous waters, I'm glad. What else? That's about it. So I want you to all stay safe with and Traveler, thumbs up to you. Anyway, so I'm out of here. We'll see you guys next Friday. I don't know how I'm gonna do it. Chris is not around. Okay, you were excited. Okay, hold on. Thank you, Joey BTV. I appreciate your time. Thank you, William. Okay, you were. Yes, I was. Past tense. CLX Mara, what's happening there? Influenced by Bitcoin? Oh, well, it's influenced number one by the stock market. We did the trade already. A couple of you already said I made some money. Okay. Let me look at those charts real quick. I know Chris is going to kill me, but let me look at it real quick. Okay, here's the chart. Let's look at Mara. Mara right here. Okay, that's the Bitcoin surrogate. Bitcoin, that's more sensitive to the market. Okay. Remember, I had these lines. I don't draw until they're necessary. So this thing, there was a trade. It was on the, it was basing. I said it's going sideways. 1856 to 27. That's 9 points in 4 days. If you didn't make money, Don't blame me. Now it's absolutely getting shot to bits. There is some support where it's at right now, about 17.5-ish range. And there is some more support. In fact, let me just draw you a couple more support and give you guys that. Right here, there is support right here. Bitcoin is not going down. This is not going down because Bitcoin is going down. This is going down because the market's going down. When market goes down, by the way, 90% of stocks go down. The key is now to find that gem, right? Needle in a haystack. There's good support about 15.5, 16. You can give it a shot there. It's broken down. It's under its 200-day. I wouldn't look at it until it heals itself. Let's look at CLSK, Clean Spark. Same thing. Actually, it's just breaking down today. All kinds of support right there. It's right on its 200-day average. Be really, really careful with this. Could be a massive top right here. I'd be careful. I mean, there is some support right exactly where it's at right now, 1381 range to 1350 range. If Bitcoin gets to 110,000, this will double. But then you may have to endure some pain if you think that's what's going to happen. Let's go back to the main screen. Okay. So you got that Mara CLSK. Why would market top if Fed cut rates? Exactly. You know why market tops? Market tops 6 months ahead of a recession. Market's always 6 months ahead, Kuber. Okay, always 6 to 8 months ahead. What you're seeing today is predicting what's going to happen to the economy 6 to 8 months ahead. So you have to have that mentality. Everything is like that. And if the Fed's going to cut the rates, that means the economy is weakening. That's why Fed only cuts rates when the economy is weakening to pump it up again, right? So that's an indicator that when the rates are cut, actually, market does go down initially. And at some point, it'll find itself equilibrium. I wasn't sharing my screen. Fuck, sorry. Okay, I will do that. Hold on. Iran attacks. I don't know, bro. Let's not keep fingers crossed on that one. Too many people are going to die, and I certainly don't want our people go there, fight that war. So that's why they cut the rates. Hey, Resume, get me a slice of pizza. Yeah, same here, Resume. Yes, your services would be great. Thank you. Whatever that means, we'll do it. Yes, thank you, Paul. I appreciate it. Mojotronics, hope I answered your question. Daniel says I didn't answer. Bro, I'm so lost. I don't know. I thought I shared my screen. Dang. Oh, I know what happened. Okay, so you guys got the idea without the screen. I have to figure this out. Iran attacks. Let's not do that. If Iran attacks Israel this weekend, and all these things happen on weekends usually, heads up. Watch out. Watch out below. Nothing good comes out of any of that. I hope cooler heads will prevail and this will not happen. Any other questions? No. Okay, other than Cheeky Chops spamming the board. I mean, all good comments, but Cheeky Chops has a tendency of doing that. All right, so I will post my watch list on the community board. How do you get to the community board? You get to my YouTube channel. You'll see video, short, and go swipe right. There'll be community page. Thank you, everybody. Thank you for watching. Please spread the word. I'm trying to do my best. I'm trying to wear 10 different hats. But I don't mind. I honestly don't mind. It's not for the YouTube money. Honestly, YouTube is garbage. YouTube money is worse than Uber. But what it is that if I can help you guys, educate you guys, and here and there give you guys a few trades that I'm doing. I'm still looking into how everybody can commingle their money and we can do like a Sergio's mutual fund or something. But the legality is ridiculous. It's too much stuff. And I don't want any liability on me. I think that would be awesome, you know, like an investment club kind of a thing. I'm still researching it. But with that said, thank you, everybody. Please spread the word. And thumbs up. And I'll see you guys next Friday. I don't know what kind of form it will take. It will probably mostly Q&A because I don't know how to set up my screens. So be safe out there, please. Enjoy your weekend, and I'll see you guys next Friday.